This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
Hello and welcome to Stockbox. Today we're bringing you something a little bit different. They've not been on Stockbox before, but they're here to tell us more about what they do and their latest interim results. Yes, I am talking about XP Factory PLC. And here to tell us about what they do is Richard Harpham, CEO. How are you doing this morning, Richard?
Thank you very much. How about you?
I'm very well, thank you. I don't really know what to say about the weather, but I'm very interested to hear about what it is that you do, because I think it's ideal for the season as well. Interesting concept that you've got there. XP Factory PLC. You have boom battle bars and escape hunts. What are these? Tell me more.
We do. So XP Factory is one of the leading experiential leisure companies in the UK at the moment. And it's exactly as you say, we've got these two brands, Escape Hunt and Boom Battle Bars. We started our journey with Escape Hunt, which has now become the leading global player in escape the room experiences. So for any of your audience that isn't aware, escape rooms are these kind of highly immersive, heavily themed environments. They're kind of like theatre sets that we build. And then you come along with your team, with your friends, and ostensibly you are finding clues, solving puzzles to escape the room. So, the themes can vary, it's everything from Alice in Wonderland through Pirates themes, through Doctor Who themes, which we licensed from the BBC, loads and loads and loads of different themes. Really fun, very immersive experience, and is proving fabulously popular with customers. So we started with that business, which we set up here in the UK in 2017. That's now grown to 26 sites that we own here in the UK, with a franchise business of a not dissimilar number internationally.
Right.
At the back end of 2021, we put the second, sort of leg to the business, if you like, and we acquired this tiny weeny fledgling business called Boom Battle Bars, which at the time was, when we first actually started looking at it, it just had the one trading site, but it had this really interesting portfolio of property that we could roll into quite quickly. And what was really exciting to us about Boom Battle Bars was it was in that competitive socializing space, which we love. Lots of kind of crossover, if you like, with Escape Hunt. So high energy, high vibe sites. They're bars, but they're anchored by crazy golf, by axe throwing, by shuffleboards, by darts, by a whole suite of games. So they're just really good.
Axe throwing, now that's an interesting one.
Exactly right. So axe, that is such a popular thing. You turn up on a Thursday, Friday, Saturday, you will not get a free spot on an axe lane.
Well, funnily enough, I was with some people earlier on this week and they were talking about the best thing for stress relief is chopping wood.
Well, there you go.
Yeah.
And wood, and it's pretty close, isn't it?
Yeah. I can just imagine this. So where are you, you mentioned then, you started with the Escape Hunt, and then you've gone on to the Boom Battle Bars. Are they all in the same venue? Does every Escape Hunt have a Boom Battle Bar as well? How does it work?
No, it doesn't. So because Escape Hunt was the first business that we set up, we've kind of rolled out fairly broadly across the country, everywhere from sort of Glasgow through down to Exeter. So we're fairly widely dispersed in the UK. But because we got there first with Escape Hunt, it means that a lot of the sites that we've now, or at least a lot of the towns that we've now gone into with Boom, we already had Escape Hunt. So we're not going to relocate for the sake of doing so.
Yeah.
That said, up until last night, we had 5 sites. With last night, where we opened a beautiful new unit in Cambridge, we now have 6 sites where both businesses are co-located. But no, in the main, Escape Hunt sits on its own, Boom sits on its own.
Right.
Or just a thing that's happened through timing. Where we can put them together, we love to do so.
And you mentioned a franchise model. Are you franchising nationally as well, or just internationally?
Well, so on the Escape Hunt side, the franchise business is entirely international. We own everything in the UK. In fact, we own a couple of sites internationally as well. On the Boom side, the position that we inherited through acquisition included some franchise sites. Actually, we've bought a lot of those back. So at the moment, we operate 26 owned sites and have 5 that are franchised for Boom.
26 owned sites. That's
We
impressive.
opened an awful lot of sites through 2022. It was a very big year for us. We kind of went from pretty much nothing to opening across both brands 25 sites in that year, whilst hiring 1,000 people, whilst building a brand from first principles for Boom. So yeah, busy year for us in 22.
So you come out of COVID, of course, where we had lockdowns, socializing aspect of everything stopped. And in 2022, you hit the ground running.
We did. We were being candid. We were really lucky to survive COVID. As we went into COVID, we were a tiny weeny business. We'd only been going for a couple of years. You're building something from first principles. And so we went in with 8 sites, escape hunt only. And whilst those sites were in and of themselves starting to, show some really, really good signs of maturing economics, and whilst they were becoming profitable, which was great, we obviously had invested quite significantly in the head office to allow us to scale. So as a group, we were loss making. And so going into COVID as a business that had literally a month previously reported £5 million of sales and £2 million of EBITDA loss, it was highly improbable that we were going to survive. But due to having some wonderful shareholders who actually could sort of really see the story, see the journey ahead of us, and could see the uptick in these metrics that we were beginning to show in such an early stage business, they were good enough to support us. And so through that period, whilst all of our sites were closed, once we'd sort of managed to survive, so to speak, the strategic imperative became obvious. We need to go after scale really, really quickly. It is not worth coming out of COVID subscale. We thought at the time, from the 8 sites that we had, we needed 15 to be break even as a group. So the first thing was, well, let's get to that and let's build these sort of 7, 8 sites that we require through that COVID period, which we did for Escape Hunt. We then doubled down on it even further and absolutely bet the farm on the sector through the acquisition of this really, really young business, Boom Battle Bar. And then when we did come out of COVID and we went through that sort of year of crazy growth in 22, the net effect of all of that is, last year we published results where we were in round numbers, sort of £60 million of revenue, £6.5 million of EBITDA. So massive growth from that £5 million that we'd had only a couple of years previously.
Fascinating, absolutely fascinating story. And I, for one, and I'm sure others are thinking the same as they're watching this, I'm thinking, where is the nearest one to me right now? Because especially with the season coming up, we've got the festive season coming up. It just sounds ideal. A little bit cold outside, it's a nice activity to go and do.
It is, and obviously December for hospitality business per se is always going to be your busiest month by a stretch. But our 2 offerings are great because our demographic split's really interesting. So we split right down the middle on both businesses, male and female. We're actually fairly flat in terms of age demographic as well, age distribution.
Yeah.
35 to 35s do over-index as you probably would imagine. We're actually relatively flat. So the good thing there is, if you're booking the Christmas party and you've got 100 people in your office, not everybody wants to do the same stuff, but you come to venues like ours and actually, whilst, some of the blokes in accounts might want to throw some axes and some of the ladies in finance want to play darts. The point is you've got something for everybody under one roof. So it's quite a fun thing for corporates. Yeah.
I'm sure there's plenty of safety measures in place for those colleagues that might have a little bit of conflict when it comes to the axe throwing. I don't know. I can just see how that might go down. So I
can assure you that whatever games you're playing, it gets getting fabulously competitive. And that's what creates the noise and the energy and the vibe. That's kind of why you have the game.
Yeah. Well, Richard, let's have a look at your results because you have just recently published some interim financial results. What would you say are the key takeaways from your interim financial results? Strong results, would you say?
Yeah, definitely. And certainly when you consider that the market at the moment is really soft. So to put some perspective around the market for leisure, generally speaking, it is pretty much flat at best, and the bar sector is actually quite heavily declining. So bar like-for-likes across the industry for the same period were negative 6.8%. So for us on the Boom Battle Bar side to have posted like-for-likes of 4.4% was a really strong performance, especially because that's all volume-led. So we haven't moved pricing in either business. We've been really quite sympathetic to the customer and the softness in consumer sentiment particularly. So we haven't moved pricing for sort of 2 to 3 years now. So the like-for-likes in Boom of 4.5% were volume-led, very strong relative to a market that was negative 6.8. And on Escape Hunt, which is a much more mature business for us, it's a 7-year-old business now, still posting 3.5% like-for-likes, was a really, really strong position. And so obviously what those like-for-likes were doing were contributing to the overall sales growth. So you'll see that we reported sales being up a third over the equivalent period last year. Like-for-likes are clearly driving a chunk of that. New sites are driving the rest. So the new sites really were coming on the boom side. Actually, it was bringing back, buying back, taking back 3 franchise sites in the boom side, and to create owner-operated businesses that really drove that delta and moved you to that sort of 33% uplift. But I say the thing that's critical is that whilst the sales growth is obviously lovely, well, the kind of the thing that pays the bills is generating it profitably. So reported £1.5 million of EBITDA at a group level. That's IFRS 16. So for any of your audience that aren't aware of what that means, it means that we fully account for all of the property costs within that. So that the property costs are within, we've absorbed those within that £1.5 million of pre-IFRS 16. And that was up from £1 million in the period previously. But interestingly, within our business, actually, it's a very cash generative business. So whilst we reported £1.5 million of EBITDA, we actually reported £2.1 million of free cash generation over that same period. And the reason that our cash generation is higher than the EBITDA is because of really 2 dynamics. We're in this privileged position where we have a negative working capital cycle, i.e., our customers pay us before we pay our suppliers.
Yes.
Secondly, we have rent-free periods on quite a lot of our sites. So when we build new sites, we get landlord incentives. Sometimes that's cash, as in it's going to cost you £1 million to build. Here's £400,000 of cash. Or it could be, we'll give you 2 years of rent-free at 200 grand a year in rent, or whatever it might be. Now, we have to account for that rent as if we were paying it. But from a cash perspective, we're not. So that's why you get this divergence between cash generation and EBITDA. But fundamentally, really strong cash generation in the business, great performance at the top line. And fundamentally, we think it's set the platform for some, exciting periods to come.
Yeah, well, we'll talk about that in just a moment on what's to come. But just to, take a closer look at these results, which specific achievements for you stood out during the reporting period?
Well, I think, weirdly, I'm always going to look at the numbers being the byproduct of doing the operation properly. So the thing I'm always going to look to first is how our customers are receiving us. So the thing that makes me proudest is that across the broader entertainment and leisure sector, our 2 businesses are still sit at numbers 1 and 2 in terms of overall aggregated customer reviews. So we have an external company that aggregate all of the reviews across TripAdvisor, Facebook, Google My Business, etc. And they compare and contrast against the whole of the leisure sector, the sort of entertainment subsectors within it. And our businesses have sat at numbers 1 and 2 for really quite a long time now. So that's the first thing that I'm always going to be the most proud about. Get it right for customers. You're likely to get it right economically at some point in your journey. But then, if you're calling me on the numbers, I think showing positive like-for-likes in a really negative period of consumer sentiment is a really good thing. Showing fundamental growth is a good thing, but these cash generation metrics continue to come through. And if you delve a little deeper into the unit economics for both brands, you've got Escape Hunt, which is making 40% EBITDA at a site level. That's an incredibly high level of cash generation from that business. You've got Boom, which is earlier on its journey. We made 12% in the half. Obviously, Boom is massively H2 weighted. So that 12% in this half will move towards 20% for the full year. So that's a really good place to be for a bar business. That sets it well ahead of its market. So that's a really positive thing. And all of it is underpinned by a 50% return on capital in both businesses. So as we invest in these new sites, we're returning our capital in 2 years or less. That's a really strong place to play. So I suppose those would be the highlights I'd probably draw your audience towards.
It is a strong place to play indeed. And what are your plans moving forward now? Do you have, are you continuing to expand? What are you planning to do over the next 6 to 12 months?
Yeah, well, we've identified for a long time this significant runway opportunity that exists for both brands. yes, here in the UK, but also internationally. But if we just sit here in the UK right now, we think there are at least 100 of both businesses that we can go after. So 100 escape hunts and 100 booms just here in the UK. And the limiting factor has been being able to go after that quickly. How do you fund it? Now, we've been in this lucky position for a little while now where we've been making quite good organic cash flow. So, last year we threw off sort of £7.1 million of organically generated cash flow. So that's great. So we can invest in new sites using that capital. But in practice, against that £7.1 million, you're always going to have a little bit of interest payment. You're going to have some maintenance capital that you've got to expend. You're never going to go below £3 million of headroom, because that would be crazy for a business of our size. So it means the actual investable capital that you have is probably half. And whilst that's great, and whilst that means we could still build 6 sites a year, it meant that we weren't able quite to go at that opportunity as quickly as we wanted to. Now, ordinarily, you'd just go back to your shareholders and you'd make such a compelling case on the return on capital that you'd expect to receive more money to go at it. But the markets are so soft at the moment. We just felt that the share price doesn't represent the value in the business. Therefore, we're not very keen to go back to shareholders to ask for more money. So what's been really exciting is we've unlocked a £10 million revolving credit facility with Barclays. And now that that has been unlocked, we can absolutely go after this runway that we've spoken about. So we announced last week that our ambition to the year ended 2028 will be to put 50% on the top line. So that's taking it to a £90 million top line, and double group EBITDA. So moving that to about 13. And what that will create is a run rate business at £100 million of revenue at £15 million of group EBITDA. And so it will be a step change again from where we are. And I think quite excitingly, with this facility from Barclays underpinning it, we can now afford to do that whilst maintaining really quite modest net debt ratios. So maintaining a net debt ratio of about 1 times should allow us to do that without needing money from shareholders, and obviously while staying pretty under leveraged.
Yeah. So it's basically giving you the freedom, as you mentioned, then to just be able to move forward with it.
Absolutely right.
Yeah, and it sounds very exciting. I mean, to have that £10 million buffer in a sense, to be able to do that.
It was hugely exciting because it also, and if for no other reason, you think about the cash dynamics in our business. We're in December right now, and we will, touch wood, make a hell of a lot of our year's cash in this month. Now, of course, that's wonderful, and it all kind of flows out in the mix. But you want to be building your sites at the start of the year. You don't want to wait for December to come before you can go building. So so therefore, the facility offers us a timing sort of flexibility, which is great, i.e. working capital, obviously money in absolute terms to go. And it means that we can build, probably 8 to 10 escape hunts every year. It means that we'll do sort of probably 3 to 4 large format, prime, proud, high dense locations for boom per year. And we'll achieve that sort of doubling of EBITDA over a pretty short period.
That's great. Well, do remember to have one close to me as well here in Derby. Sounds wonderful. And I am definitely going to be looking you up and seeing where I personally can get to this axe throwing. Anyway, that's what's enticing me. But of course, it's the first time that you're on Stockbox here, Richard, and it's great to have you on, and wonderful to hear about such an interesting concept, and to hear about your strong results and your plans moving forward. But what would you say to investors? What would you say to future investors that might be watching right now?
I'd say there are probably 3 key points I would look to pull out of the results that we've just published. One is that we've continued to create really strong cash generative growth against a really tough consumer backdrop. So that and let's be clear, that consumer backdrop's been really difficult for the last sort of 2 or 3 years. But in that time, kind of grown from a business of 15 to 20 million pounds of sales through to 60. So we've performed really, really well cash generatively against a pretty soft backdrop. In the consumer space. So that, I think, is something to be proud of. I think having this clarity around where the growth is now going to come from for both brands, that will see us double EBITDA over the next sort of 3.5 years. I think that's a really powerful message. And I think also that it was a sort of a secondary point that we made, but I think it's a really important one for your audience to recognise, is that we announced the reorganisation of our balance sheet as it exists, basically to reorganise away from our share premium account towards distributable reserves. And the reason that we've wanted to do that as a business is we want to have the facility to either buy back our own shares while the market continues to be soft, and or at a point be able to pay out dividends to shareholders. So that reorganization is a really important thing as well, and probably gives, a good suggestion of our confidence in our business that we would also be looking to buy back our own shares too.
Yeah. Well, wonderful. Thank you so much, Richard, for taking the time to talk to us today on Stockbox. And I do hope that you'll be back on and as we continue to follow your journey and see the progress that you're making. It sounds like you're entering very exciting times, and we do wish you the very best.
It's been a real pleasure. Many thanks indeed.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programmes at stockboxmedia.com. Thank you for watching.